Welcome to Profiletraders. This is Reza and you're listening to my market analysis for March the 27th. We are looking at a chart of the S&P Emini futures here, and what we are seeing is that since we started the correction from 2400, we went few sessions sideways, while we have never been able, as I said in my last report, to breach and close above 2350. We tried several times, and each time we went above 2350, we dropped quite sharply from a close point of view and closed below 2350, confirming that this test of 2350 to 2355 was nothing but a retracement against this big day of a drop that we had. And if I amplify the profile, you can see that the area in this profile, when we came down from 2379 to 2340 in one day, the area where we have these single TPOs has never been able to challenge, which is telling us whoever was behind the sell-off was very serious seller, because he never allowed price to enter into its zone past 2357. Then came the debacle of Friday, which we all heard that the Republicans were unable to pass the healthcare reform, or whatever you want to call it, the healthcare bill, and that obviously brought a huge cloud of uncertainty into the market. Why? Because now every single rosy scenario that market had anticipated, with the tax cuts, with the infrastructure spending, to an extent with the healthcare bill, all of that is now in doubt. Because if they were unable to pass the simplest of one of them, which was the healthcare, now it is not a guarantee whatsoever that Trump can deliver a full-blown tax reform of the whole entire United States tax system, and then infrastructure spending, etc., etc. I'm not saying that he won't be able. I am saying that it puts now doubt into that whole delivery of it. And with that, obviously, every point that market went up anticipating that those reforms were done deal, now it's coming into question. And then we saw a big response from last night in it. And I always also told you that 2330 was a very big number, that if we would break, market would be on a breakdown mode and one had to be cautious. And last night, as soon as we did break below 2330, we melted down all the way to 2318, off of which today we saw a very nice bounce. After the day session came and tested the overnight low here, was unable to break it, then they created a very strong short squeeze into the session. Now, has anything changed from positive or from negative to positive? Not whatsoever. This is still regular standard correction against a big drop. How far could we go? First of all, we could very well go and close this gap here at 2342.5, which there is a POC above it at 2340 23.5. That should be the first area of resistance. Then it could go to 23.50, but most importantly 23.57 is still remaining the main area of resistance. We could very well still come up to 23.50, 23.57, and from that point on drop very sharply again. If we are allowed to pass 23.57 and the seller from this profile where we have all the single doesn't defend it, then I would say that market is turning into very strong bullish, and upside objective could become 23.80. But until we have not done that and we remain and trade below 23.50 first and 23.57 second, we are very much so open for other days of sharp drop. Keep in mind that also we are ending the quarter by the middle of this week. We are entering into earnings season next month, so those two elements will also have an impact on the market. But as of right now, we had a good open or a good close into today's session, but again, until we are below 23.57 to 23.50, we could definitely see reversal back down. What would be the first area of support to look for a possible breakdown? That first area would be 23.33. We break 23.33, I believe we should drop towards 23.28, and if we break below 23.28, the retest of this morning low and last night low at 23.18 is still on the table. And on the way up, you already know the resistance levels: 23.43.75, 23.50, 23.57. Now let's look at what's going on with crude oil. Crude oil, from what we are seeing here, is that it's possibly forming a little bit of a bottom here, because after the very big drops that we have seen happening on the daily chart, once we did break the 52, we are seeing that the range of the candles are shrinking and the selling is drying at these levels, which is obviously a level of support which is at the touch of the main trend line up. And therefore, if this support continues to build itself up without being able to see long range days to the downside, an oversold bounce is very much so due. So what would be the first level of support? First level of support is 47.46. Second level of critical support, 47. Anytime we do break 47, this could be wide open for a drop to 46 in order to test this low here on the daily. But right now, as long as we are above 47.50 to 47, these two strong support areas, upside objective could be first 48.38 and then second upside objective 49. Tomorrow we don't have any numbers relating oil, but Wednesday we're gonna hear what the oil reserves are going to be, and that definitely will have an impact on the market. So it's gonna be an interesting week going into the end of the quarter. Let's see what happens. As always, thank you for listening, and this was Reza with Profiletraders. If you wish to learn market profile, check my website. You can get all my 5 courses, 1 year to my trading room, live trading room, all of it for $550, 30 days money back guaranteed. Have a great trading, and to the next time.